First, let's take a look at how the markets performed this week. First to Europe. Euro Stoxx Index as at Friday the 10th. Not a great week for European stock markets. The markets ended in the negative with the Euro Stoxx 600 closing at 457.27, down by minus 1.09. The London FTSE All-Share Index ended at 7,868.07. It was down by minus 0.54%. The markets in Germany also saw the DAX close at 15,290.01, also down by minus 1.51%, while the CAC 40 in Paris ended the week at 7,116.98, closing negative at minus 1.0. And finally, the IBEX 35 in Spain closed the week at 9,105, down by minus 1.49%. Now to the Nigerian stock markets as at the last weekday of trading on Friday. Let's look at what happened. A total of 175 million shares in more than 3,000 deals, corresponding to a market value of 5.3 billion naira were traded. Now, compared with the previous NGX trading day, Friday's data shows a 22% decline in volume, a 69% improvement in turnover, and 7% improvement in deals. The current market capitalization of the NSE is 29.59 trillion naira. And finally, a look at Wall Street as at Friday, February the 10th. Now for some top business stories that made headlines this week. In Nigeria, Nigeria's Stanbic IBTC PMI produced, along with S&P Global, reported a 1.1 percentage point difference from 54.6 in December 2022 to 53.5 at the end of January 2023. The index, though still above the average, moved closer to the 50 no-change threshold, signaling a softer improvement in private sector business conditions from the previous month. According to the report, business activity increased at a slower pace at the start of the year. Although demand remained high, customer numbers eased. Likewise, firms scaled up hiring efforts, only to be met with backlogs of work amid machinery and power supply issues. Also noted in the PMI report was the decrease in overall cost inflation, which reflected a softer rise in purchase prices. However, output costs rose due to higher fuel and raw material prices, a weaker naira, and increasing staff costs, which continued to drive input inflation. The National Cotton Association of Nigeria, NACOTAN, through a communique issued at the end of its maiden Nigeria International Cotton Summit Expo 2023, has urged the federal government to keep the Anchor Borrowers program going, particularly for cotton farming, in order to sustain the gains achieved so far in the sector. It maintained that the sudden withdrawal of the program in the cotton segment after 2 years of intervention had created problems of continuity, and that a 5-year run is more practical to realize the full impact of the intervention. The association urged the CBN to eliminate multiple taxation on cotton, textile, and garment industries and products. The Nigerian Midstream and Downstream Petroleum Regulatory Authority yesterday vowed to sanction petrol retailers rejecting the use of point-of-sale machines for payment for services rendered to customers. Representing the organization, Mr. Kimchi Apollo, GM Corporate Communications and Stakeholders Management, stated that it would collaborate with security agencies to ensure that none of its rules were flouted, including the use of electronic means of payment. In Kenya, Adenia Partners, a Mauritius-based private equity firm, is moving along discussions to acquire the Kenyan restaurant chain Java House. Adenia's buyout offer to UK-based fund Actis, who acquired the stake from Dubai-based Abraj Group, could get as high as 3 billion Kenyan shillings. This marks the UK's fund's largest and latest deal in Kenya's hospitality sector, after buying 3 hotels for an estimated 1 billion Kenyan shillings. Java was founded in 1999 by an American and opened its first coffee shop in Nairobi. It has since grown to 82 branches across Kenya, Uganda, and Rwanda. The Java deal will deepen Adenia's presence in Kenya after it acquired stakes in several companies in 2019, including a retail chain, a heavy construction equipment dealer, a company that deals in fresh cut roses, and another in health kits. IMF head Kristalina Georgieva warns American consumers of impending doom should the US default on her debt payments. This is adding to concerns that the standoff between Republicans and President Joe Biden over raising the debt cap could cause a market meltdown if Congress in Washington fails to resolve it. The government's debt reached its cap of $31.4 trillion on January 19 and legally cannot exceed this amount. The Treasury has said it can hold out at least through early June by using special accounting maneuvers. However, the IMF chief warned that a US debt default would cause a spike in borrowing costs, squeezing consumers and bringing significant harm to the world economy. It will push interest rates up, and if people don't like inflation today, they're not going to like it at all. What may happen tomorrow, she said. On Tuesday, all multinational BP plc posted record profits of $27.65 billion for the year 2022. The oil major also hiked its dividend to investors by 10% and extended share buybacks to the value of $2.75 billion. This recent development has highlighted a potential contradiction in Europe's oil industry, where major producers are profiting from their fossil fuel business as a result of Russia's invasion of Ukraine, amid the increasing talks about the need to cut emissions and switch to cleaner energy. BP has also revised its goal to lower production of fossil fuel by 25% by the year 2030. That's a big revision to its 2020 goal to cut output by 40% by the end of the decade. Google has announced that its own conversational AI service, Bard, that's B-A-R-D, and rival to ChatGPT, would be opening up for early testing and fully serviceable to the public in the coming weeks. The company has selected testers that are geographically diverse and outside of the company. Their feedback will help Google improve on Bard's quality and speed. Google is currently facing challenges to its flagship search business, which drives most of its revenue. Last week, parent company Alphabet reported that sales didn't meet expectations despite a digital slowdown and investor anxiety caused by rival OpenAI's ChatGPT. In addition to Bard's release, Google will allow developers to tap into its language models to create their own applications. The Central Bank of Australia raised interest rates by a quarter percentage point, saying that further tightening will be required to counter high inflation. The Reserve Bank lifted the cash rate to 3.35%, the highest level since September 2012. This sent the currency to an intraday high of 69.51 US cents, while three-year bond yields jumped 18 basis points to 3.28% and stocks fell 0.5%. Australia has actually lagged international counterparts in its policy response to higher prices, having raised rates by 3.25 percentage points compared with 4 in New Zealand and 4.5 in the US. The Reserve Bank's slower pace reflects Governor Lowe's efforts to ensure a soft landing for the economy. In a new round of tech job cuts, Zoom Video Communications has announced it will be eliminating 15% of its workers as it adapts to slower growth post-pandemic. CEO Eric Yuan said that the company's trajectory changed during the pandemic, tripling headcount in 2 years. He admitted that there wasn't enough consideration to thoroughly analyze their teams or assess if the company was growing sustainably. Now the company is having to reverse slowing growth by expanding its tools for business. Yuan also stated that 1,300 jobs will be cut as part of a restructuring exercise, plus the company would also be reducing his salary and foregoing his bonus. Ratings agency Fitch on Wednesday revised its 2023 forecast for China's economic growth upward to 5.0% from 4.1%, as consumption and broader activity are recovering faster than initially anticipated after the end of the zero-COVID regime. Fitch was the first major ratings agency to upgrade China's 2023 economic growth forecast ahead of S&P and Moody's. The ratings agency said that recovery would be primarily led by consumption, noting that although many high-frequency indicators have recently rebounded, they remain below pre-pandemic norms. President Joe Biden gave his second State of the Union address on Tuesday night, touting several ways the country has improved over the last year and also highlighting record low unemployment, massive job growth, and a gradual decline in inflation. However, in a recent Gallup poll, the American public is not feeling as optimistic about the current state of their finances. 50% say their finances are worse off now than a year ago, and only 35% say they're in a better shape now. But on a slightly positive note, 60% of consumers in the poll are optimistic they will be better off a year from now, while middle and upper classes are actually faring well currently, according to the Gallup poll. Swiss bank Credit Suisse reported its biggest annual loss since the financial crisis in 2008. On Thursday, the bank posted a loss of 1.4 billion Swiss francs in the fourth quarter of 2022. That's extending a losing streak that started in 2021. The bank's total loss in 2022 was 7.3 billion Swiss francs, and its stocks plunged 65% during the course of that year. In the wake of the harrowing earthquakes that struck Turkey and Syria on Monday, Istanbul's stock exchange operator suspended trading until February 15 and, in an unorthodox move, cancelled all of Wednesday's trades. Turkey's Borsa Istanbul suspended trading on its equity and derivatives markets within minutes of opening after market-wide circuit breakers stopped the slide in the main index at 7%. The country's benchmark index fell as much as 16% from its Friday close before the Wednesday's trades were cancelled. Investors have called on 5 European banks and Britain's HSBC to stop financing new oil and gas fields or risk jeopardizing the path to net zero carbon emissions and the growth of renewable energy. The demand letters were sent to the heads of Barclays, BNP Paribas, Crédit Agricole, Deutsche Bank, and Société Générale this week. Share Action, a responsible investment company, notes that European banks are amongst the largest financiers of the top oil and gas companies who have expanded their production between 2016 and 2021. And finally, American ride-hailing company Lyft has seen its shares crash after publishing a weak outlook for the first quarter of 2023. The company's shares fell more than 30% during after-hours trading following the weak guidance in its earnings report on Thursday. Lyft lowered expectations for revenue in the first quarter by $200 million to $975 million, missing analyst expectation of $1.09 billion in revenue. That guidance sent shares plummeting 25% in after-hours trading on Thursday to $12.13. Although Lyft's revenue surpassed expectation in 2022, shareholders were more affected by the company guidance for the first quarter. Well, that's it for the market roundup.